Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have no offers accepted if you're not viewing. So be out there viewing. Pay attention to the back of the class. If you've not been watching my videos, I did one just a couple of days ago. Disregard the guff, guys. Good morning, everybody, and welcome to a special 5 Fact Friday from the road again. So forgive me, haven't got everything I normally need if this is not quite as smooth running as they normally are. But I think reality is starting to dawn on the wider population and the media that the property party is over. And I'm going to run through the 5 facts of Friday and then expand on my reasons for that. But as I've put on the screen here, it's been a 40-year house price party with a couple of bumps along the way. But even after those bumps in the 90s and after the financial crisis, they bounced back up, didn't they? I'm going to talk about why I don't think that's going to happen again in the next 10, 20 years. Before we start on the 5 Fact Friday, I want to just first of all, welcome. I've had a lot of new followers, a lot of new subscribers on YouTube, on Twitter, on TikTok, on Facebook, on Instagram. So wherever you're watching this, thank you. Welcome to all my new subscribers. Welcome back to all my existing followers. This bears repeating. A lot of people are very confused when they see my messaging for the first time, thinking that I have an agenda. So my stated goal, my long-term career stated goal, is a home for everyone. When I started working in the moving industry as a supplier of technology and marketing services to estate agents in London and in Sydney, and started to get estate agency clients, both large and small, around the country, my goal was to make moving easier, because what I'd experienced when I started out was that moving home was really difficult. I thought, it's got to be an easier way. And I was naive and young and everything else, but I got into it and we started to make a difference. I'm not going to go into that too much, but my mission is to make moving easier. And what I've learned after 25 years of working alongside estate agents is that good estate agents make moving easier. So I am here, number one, to help movers navigate the snake pit that is the moving industry for the most part, and share the insights that I've gained from working behind the scenes of estate agency in the industry for 25 years to help movers have a better chance of navigating. I'm also on a mobile internet connection here, so apologies if it's a bit sketchy. Can you guys hear me okay? Is it all right? I hope you can. I will keep going. I don't care. For the purposes of my mission of a home for everyone, I don't care if prices are going up or going down or not moving. I'm here to help movers, whether you are renting for the first time, renting for the second time, buying for the first time, selling for the first time, selling and then buying, selling to downsize, selling to whatever it is. Because to me, moving is such an important part of people's lives, because when you move home, it normally coincides with moving on in your life. It might be for good reasons, it might be for bad reasons, but you're moving on. And I want to help as many people as possible move on with their life. So I don't want house prices to crash or fall. I don't want house prices to spike. I don't care what happens to house prices. What I'm reporting is what I'm seeing. It's and again, from behind the scenes of the moving industry. And I have access to a huge amount of information from different sources to see what's really happening. And that's how I was able to say this time last year that it was very clear house prices were about to start falling, and they did. And that's why I haven't changed my mind as people have gone, oh, we've hit the bottom and it's bounced. No, the number one thing people don't understand about the property industry is just how slowly it moves. And therefore, no matter what rabbits are pulled out of the hat in the next few months, we are going to see prices falling on average, varying degrees around the country, for at least the next 18 months, and probably more like the next 2 years, 2.5 years. And after that, I'm expecting them to flatline for a while. There might be a little false dead cat bounce at the bottom. Sometimes there is. So why is this relevant for me to be helping people move house? Because I don't just want to help people move. I want to help people make a good moving decision and not fall into the trap of making a moving decision that they later come to regret. Which is why I've been sounding the bell, the alarm bell of negative equity for a while, because there are people who've bought in the last year or two, or have bought this year, who are buying right now, who are innocently believing that house prices are not going to fall and are going to find themselves in a problem. Now, if you've bought recently and you're planning to stay for a long term, 10 years or more, you don't have much to worry about as long as you can keep up your mortgage payments. But there are a lot of people who are going to be finding themselves in hot water. And that goes against my mission of helping people move on in life, and moving home is a major part of that. Okay, so why am I seeking publicity? To sound the alarm of negative equity, because the industry doesn't. It doesn't talk about it, doesn't want to talk about it. And I get why, because people in the moving industry need to make a living too, and they make a living when people move house. And if people stop moving house, it affects their income, and it has done already this year. And I'm sorry about that, but I still think it's important that people make moving decisions for the right reasons. Now, so there's my agenda, right? My agenda is to help people move and to help people avoid negative equity when we are experiencing very, very high risks of that right now. Let me crack on with this week's 5 Fact Friday briefly, and then come on to explain why I think the long-term party is over. And it's especially first-time buyers that need to understand this, because most first-time buyers now have just seen other people who've bought in the last 10, 15 years do really well out of it. And so that's the only reality they know. So they're expecting the same thing. It's so important to understand that that's not going to be the case, I don't think. So let's just crack on. Fact number 1. It's been all over the news this week, hasn't it? I've got a link to the link to all 5 of these in the description below. So the average mortgage rate for 2-year fixed deal is approaching 6%. And that, a lot of people have been saying, is breaking point. Now, you can interpret breaking point however you like, but it's a point at which actually, for first-time buyers, possibly it becomes too dangerous to buy. And therefore, as one mortgage broker said to me, a lot of first-time buyers, he said they're going to go on strike. Nationwide, I mean, everyone, HSBC, Nationwide, NatWest, Santander, they've been pulling products and raising rates almost every few days for the last couple of weeks. And as I said in that video a couple of weeks ago, don't buy now unless ... Basically, that was, I could, very early doors, I could see the mortgage turmoil that was about to come, and it has, and it is, and we're not through it yet. We're into a realm of mortgage rates that 6 months ago, nobody or very few people believed was possible. Okay, so that's fact number 1, right? Mortgage rates are, well, they're spiking, they're going up. No one knows how high they're going to go up. They might go up a bit higher, then come down a little bit again, but they're going to be staying high for a while, because the Bank of England has made it very clear that they're not going to stop fighting inflation with high interest rates, and interest rate rises are expected. Let's go on to point number 2, which is very important. I have lost count of the number of times people have said to me, oh, the government won't let house prices fall. House prices aren't going to fall because the government won't let them. I mean, that is the most wonderfully naive point of view I think I've ever heard. As if the government actually has control of house prices. Yes, it can influence them. Things like Help to Buy definitely made a big difference, but they can't actually control the market, okay? Otherwise, it wouldn't be a free market. So here we have it in black and white from the Chancellor himself. Jeremy Hunt rules out help for mortgage borrowers as he backs the Bank of England to continue hiking interest rates, even if it causes a recession. So number one, there's not going to be a mortgage borrower bailout. Number two, he doesn't care if we have to go into recession in order to kill inflation. Why is he saying that? Because he knows we're going to have to. He knows it's going to happen. And then, so when we do go into official technical recession, he'll be able to say, well, yeah, we knew this was a possibility. So that's fact number two. The government has ruled out bailing out mortgage borrowers, okay? Every single day I see it in comments and notes. It's not going to happen this time, guys. And one of the reasons it's not going to happen is anything like that costs the government money. And right now, the government's borrowing costs are spiking as well, which is a real problem for them and for us, for taxpayers, for everybody. So that's point number two. No help for mortgage borrowers. Point number three. It's the first time I've shared anything from Guido Fawkes. Rates are now higher than they were after the mini budget aftermath. Okay, this is gilt yields. I'm not going to go into too much detail here, but this is a problem for the government, for government borrowing, which is coming in higher than expected every single month. It's a problem for the swaps market, where the mortgage lenders source their funds if they don't have deposit funds to lend. And it's a problem for everybody, right? High rates, very high rates are a problem for everyone and are likely to cause, and they are now higher than, so in other words, there was a big media thing about, the mini budget caused this nightmare and it was a storm and the Tory party caused it. Yeah, but it was coming anyway. If you look at the long-term gilt yield trend, it's just been going up and up and up and up and up and up and up for the last year or so. It was going to get here. We're now there anyway, without any shock or trauma to cause it. What was the turning point? It was the last inflation announcement, where headline inflation did not fall as far as expected, but even worse, core inflation actually went up, and that was the slap in the face with the wet fish that the banking sector needed to understand. Okay, rates aren't going to come down, inflation's not coming down, we're going to have high interest rates. Whoops, we're going to have to put mortgage rates up. Okay, so that's fact number three. Now, this fact number four isn't so much a fact as just a bit of tongue-in-cheek fun, because, well, it is a fact that the Mail Online, or This Is Money, published an article this week calling what's going to happen to house prices. Two property experts go head-to-head, and one predicts a 35% fall. Well, yeah, it's a fact that they published that, but it was just me saying that. I'm in that article, linked to below. It's the second time I've been in This Is Money in a week. It's really, really cool now that my messaging is reaching the mass media, and helping to make people just consider this as a possibility before they make any big moving decisions. They had me up against a chap called, I can't remember his name. Yeah, that chap there. Rob Dix, that's right. He's a landlord podcaster, so it's unsurprising that he doesn't think prices are going to fall. Read the article, make up. If you're a regular follower, you'll already know what I've been saying. But very cool that I'm starting to get that kind of coverage now. Thank you to all of you who've helped me get to the point where that's happening. Much appreciated. And then the last point. So yeah, I'm not saying that it's a fact that prices will fall 35%. It's what I'm expecting on average, but I'm not saying it's a fact. So that's a bit tongue-in-cheek. It's just a fact that they published it. And here's the last one, fact number 5. This is a story on a website called Landlord Zone, and it's just facts about landlords selling up and why I think this is a good thing. It's not all landlords selling up; it is amateur small landlords selling up. But this conveyancing firm has basically said that landlord property deals made up 20% of its workload, but this has dropped to just 5%. So in other words, that's a 75% drop in buy-to-let investors buying property, okay, which is going to contribute to falling prices. And actually, the article goes on to say that a lot of them are selling as well. And that leads me nicely on to why the party is over. Let's start with what I call the Instagram landlords, the amateur buy-to-let landlords, the landlords who got into it because they had no deposit and they got into these schemes where they could borrow the money and buy and become a landlord, and then they rent out these shoddy properties without looking after the property, and then go and sit on the beach in Ibiza drinking a pina colada, Instagramming themselves and saying winning, hashtag winning, or something like that. Those are landlords that society does not need. Okay. When you are making money and having your buy-to-let mortgage paid off by someone who's struggling to pay the rent, and the property isn't in a good state of repair, and you are just basically the kind of sad suckers that just think that that's winning in life, is showing off your flashy car that you've also got with debt. Those landlords don't look after people, and if those are the landlords being forced to sell up, that's great news for everyone. Now, why is it good news that landlords are selling up? Because when they sell those properties, one or two people is going to buy those properties. Either a good landlord, so a professional landlord who's buying cash now, because no one wants to borrow at the 8% rates you currently got for buy-to-let mortgages at the moment, right? So the landlords who are buying their products are going to be cash buyers. And they tend to be the better quality landlords that take a longer term view of their investment, and they maintain the properties well, and they understand that in the long term it's financially very, very good to take care of your tenants because they will stay longer. And tenants who stay longer are better for landlord returns in the long run. So either those properties being sold by the Instagram landlords are being bought by professional quality landlords who understand that they're in the business of providing a service, a home as a service, and maintaining it and keeping it up to good standards, or it's going to be being bought by first-time buyers who want to buy. Okay, either way, it's an improvement on the current situation. Now, what I mean by the party is over is there are a lot of those kind of landlords who have been literally partying on the back of this incredible meteoric rise in property prices and in rental prices going up. I think rental prices are coming down. In fact, the best agent data starts to show that is already happening. I'll just get that up on the page for you. But yeah, why is that party over? Because cheap money to buy properties to rent out is now a thing of the past and will be for a while. So the partying landlords partying on the back of cheap debt to buy buy-to-let properties, that party's over, and it's not coming back for some time, right? So that's party number one that's over. Party number two that's over. So the retired generation now who bought their homes in the 80s or the 90s and have seen enormous unearned income on the back of it. Yeah, good luck to them, right? They didn't know that was going to happen when they bought them. That's not why they bought them. But they bought them, they've kept them, and they've got a lot of wealth. It's been a party for them. That generation is now enjoying amazing wealth on the back of the unearned income from the properties that they've bought. Yeah, great. Fantastic. But that party's over now because that wealth is now going to be being spent on late life care. Care homes are staggeringly expensive, and that equity is going to be needed to pay for that. Yes, of course, some of them will help their family onto the property ladder. That's normal. That's always happened, but not as much as people think. And actually, that generation right now are the ones most in denial of the fall in value of their property. I know people like this who are believing that their property is worth 30, 40% more than it's worth. And that's before the price falls come. All right. That party is over. People who bought 10 years ago will not get to enjoy the same level of asset price growth in their property that people who bought 30 or 40 years ago are going to get, right? And that's not going to happen again. You're not going to see that kind of house price growth in the next 10 years, in my opinion. So that party is over. And the people, and this is where I want to be, what the people who think that they're buying and it's going to be a pension, if you're buying now and thinking it's going to be your pension, that is also a huge mistake. The pension pot party is also over because we are simply not going to see the house price growth that we've seen in the last 40 years on average in the next 10 to 20 years? I don't think. Now, 20 years is a long time and no one can predict that far out. But when you zoom out and look at the macro level, and you realize that actually the downturn we are now experiencing and about to experience is going to be extremely painful in the next year or two, is the hangover of the property party that we've been enjoying for the last 40 years, right? No parties last forever. It's always horrible when they end, and someone's got to pick up the tab, right? Because partying literally is just it's going overboard, isn't it? It's overspending, it's overindulging, and we've done it. We've had this party of cheap debt for so long, like super cheap borrowing. It's over, guys. That party's over. As Housing Stig has been saying for a while, that party's over. We're up to our eyeballs in debt. Personally, yes, of course, there are a lot of people who own the houses outright, and there is a section of society who's got some significant asset wealth. But overall, as a country, the debt levels are very high. And as asset prices drop, the debt to asset ratio is going to get worse. And there's going to be this is why Alex did that story called Welcome to 2025. Look it up if you haven't watched that video. Just search Welcome to 2025 on Moving Home with Charlie channels and watch that video. And also, if you've got a strong stomach, watch the Death in Poverty one, which is why Alex believes that's where this country is heading. It is grim listening. We put a sort of macabre gallows humor into the conversation. But those two videos explain why the pension pot party is over, the unearned income party is over, the Instagram landlords buy to let with cheap debt party is over. And I want to make this point very strongly because I really want people buying now to understand that if one of your reasons for buying is thinking that you're going to buy now and have massive property wealth from house price rises 10 or 20 years from now, it's not going to happen. It's not going to happen. It's not going to happen. Not unless, I mean, the only thing that would change my mind is if the government transformed the economy by going on a wartime footing to borrow money, to employ people, to build on a massive scale, to create masses of quality property, both for sale and to rent out, so that they can allow social tenants to buy their houses, but not therefore loot. That was the mistake Thatcher made in the 80s. Letting people buy the houses is cool, but only if you replace it with more social housing that they didn't. If that happens, and they really make a long-term thing of that, creating an asset that the government owns, that the government's got income on, so it helps to pay the government's own debt down, creates jobs, creates wealth, creates a growing economy, maybe I would change my mind. But even then, we're not going to see the spikes. We're not going to see the low interest with which to buy the property for a long time. So, guys, that's all I wanted to say today. Do we have time for a couple of quick questions? Let's have a look. Do we have any questions? Here we go. First time. Okay, right. Ian Downing, first time buyer here, looking at buying a home next year, Q2, Q3, 2024. Okay. Best advice for now, early next year. August is the latest I will need to have a home. So if you mean August next year, it's going to be, interest rates might be even slightly higher than they are now, but prices by August next year will be a lot lower. But to be moved in by August, you will need to have a deal agreed by March next year. But that's 9 months away. And prices will have fallen substantially by then at the coalface. I'm very confident. But if you don't need to buy now, then I would be waiting till next year. Guys, that reminds me. For those of you who need to sell, must sell, I did a video a few days ago called The 6 Steps of Selling with Certainty of a Sale. It says lots of S's, right? But go and look at that. If you're a seller, please watch that video if you're a seller that needs to sell. Very, very important. And there are still people, despite the downturn, who are going to need to buy a home. There are still people buying homes now, and that's good. As long as you're not overpaying and not overextending yourself, it's good, okay? And I will do an up-to-date video about buying in a steeply falling market, because it can be done. It can be done without too much risk, but it needs ultra special care. I'll do a video on that soon. Do we have any other questions? Anyone got questions? Question, what do you think about the OBR house price prediction data? Tom, I don't know the exact figures you're referring to, but the OBR, which has bizarre limitations on its forecasting, roughly speaking, it's something like they have to make their forecasts in line with what the government's stated policy is at the time of the forecast is made. So the OBR, and it publishes this on its own website, is almost always, if not always, over optimistic. The reality always works out worse than the OBR forecasts. And that evidence is on their own website. Go and check it out. Question, what is your guess for the peak base rate? How do you think they will eventually fall, or is this a new baseline? I am going to defer to my friend Alex Housing Stig, who has done a lot of hard number crunching to reach this. And Alex, if you're watching, forgive me if I don't get this exactly right, but he expects that the Bank of England base rate will not break 6%. It'll be 5.75 is probably the highest it's going to be. By the way, I think they might raise it 0.5% next week. I think the Bank of England is so much shit. It's had so much reputational damage. It's almost like it can't get any worse, and that they have consistently failed to increase interest rates fast enough to get on top of inflation. I think they're going to raise them 0.5% next week. I do. I might be wrong, and they might only do 0.25%, but I think don't be surprised if it's a 0.5% hike next week. Which, if there is, it's just going to really pour fuel on the fire of the house price falls. So guess for peak base rate is 5.75%, and I'm plagiarizing that from Alex. And then I don't know over what time period they will come down, but they will. My expectation is that they will stabilize at around 4%, plus or minus 0.25%, 0.5%, around about 4%. But that's not going to happen. This is pure guesswork. This is not data backed. It's not something I've studied. It's not something I have a strong opinion on. But right now, if I had to guess, I think that once they've got on top of inflation and got it down, if they actually have the cojones to do that, which remains to be seen, I think it's going to be a couple of years, guys, before they'll start falling in maybe about a year's time, between 6 months to 12 months from now. They'll begin to come down gently, and take another 6 to 12 months to reach their whatever is their new baseline. Any more questions? Do you have any more questions? London Daicivera. I hope I said that right. Question, I have to move. Better to rent, wait, and then buy, or try and get a cheap place bought? Cash buyer. Thank you. Oh, okay. Interesting. Have to move. Okay. So you have to move. That means you have to sell or leave wherever you're currently. If I were a cash buyer now and I had to move, there's a long list of other considerations, but I would be out looking. I would be out looking at the rental market, and I'd be out looking at homes that I thought were in my budget, looking for bargains. Because if you find a seller that's motivated and you're in the right place at the right time, you're looking, and you make an offer when no one else is making an offer, that brings me to one more point I want to make. You can get bargains. If you buy now, you won't have to move again. So if it depends on your personal feeling about whether you want to have to move twice or move once. Will you get better value a year from now? Undoubtedly. But if you could afford a place that you're happy to stay in long term now, but by getting out and bargain hunting, yeah, I would look at both. I'd see what you can rent, see what you can buy, because of course renting will just be costing you money, and if you're a cash buyer, then you won't have that money. So there's that to take into account as well. The answer to your question is you've got to get out and look wherever it is you want to move, and see what the possibilities are. But without a doubt, a year from now, at least a year from now, will be a much better time to buy. Guys, I'm going to wrap it up. Thank you so much. Thank you all for watching. Last question here. This is an important one. Nathaniel E. just put it in there. I bought a new build in November 2021 with a 10% deposit. How do I manage negative equity? Well, first of all, I commend you for your reality and accepting the fact that you may well be, if not already, then very soon in negative equity. The best way to manage that, is to make sure, first of all, that you're going to be able to keep up your mortgage payments. Okay. As and when the opportunity comes around to switch products. I mean, if you are in negative equity, you can't switch products to get lower rates. But if you are able to pay down the mortgage and increase your equity, it's a two-edged sword. As long as you're really comfortable that you are going to be able to pay your mortgage come what may, then it makes sense to pay down as much of your mortgage principal as you can. In other words, make overpayments to reduce your mortgage actual outstanding amount. That is risky, though, if you're still going to end up losing the property, because then that's just good money after bad. So you've got to assess your own stability, your financial stability, and say to yourself, I'm sorry, this is just my own personal, what I would do in your situation. I am not a mortgage advisor, and this is not mortgage advice, right? But if I were in that situation, if I was confident that I would be able to maintain my mortgage payments no matter what, and only if I was confident of that, then I would try to pay down my balance as fast as possible, make overpayments to reduce my payments, increase my equity, reduce the risk of negative equity, and reduce the interest that I'm paying. If I wasn't confident that I would be able to maintain my mortgage payments in the long term, no matter what, then I wouldn't be overpaying. I would just be preparing myself for the risk that I might lose it, and just hoping I didn't, but preparing for the risk that I might losing it. And in doing so, of course, you are actually increasing the risk of losing it, because your negative equity would be worse if that bad day came. Brave of you to ask, brave of you to confront the reality that you might be. I do hope that doesn't happen to you, Nathaniel. I hope that you are able to stay in your home. I hope you're enjoying it. It's lovely to own a home, isn't it? As long as you don't need to move and you can stay put for a long time, just knuckle down, weather the storm, and give yourself room. I would also be paying, anyway, I would be paying off any other high interest debt I had anywhere. Pay down your debt. Guys, that's it. Gotta go. Thanks very much. I hope that's been helpful. More soon. Sorry that there's been a bit less video recently. I'm traveling. Normal service will resume next week. Have a great weekend. All the best. See you next week. Bye, guys.